And the main point is that Donald Trump is an inflationist. Of that, there is absolutely no doubt. And that is, I think, the vote that foreigners have taken, which is why gold has gone better today, which I would define as gold, metallic money with no counterparty risk. In other words, gold in possession. So, this is this really is, I think, a very dangerous situation for all financial markets, because when you get this a credit bubble of this size imploding, it takes down equities, it'll take down derivatives, which are huge.
This week was dominated by one major event: Donald Trump's return to the White House for his second term, and he wasted no time making an impact. Within hours of being sworn in as the 47th President of the United States, Trump fulfilled traders' expectations for his presidency, setting the stage for dramatic market movements. One standout reaction was gold's red-hot rally, fueled by speculation that Trump's tariffs could impact the precious metal. Gold prices surged, approaching their all-time high of $2,790 an ounce. Alasdair Macleod, head of research at GoldMoney, remains bullish on gold following Trump's inauguration. He noted that while political noise surrounding executive orders and announcements grabs attention, the real story lies in Trump's unmistakable stance as an inflationist. Macleod emphasized that this inflationary outlook drives foreign investors toward gold, solidifying its appeal as a hedge against the economic uncertainty expected under Trump's leadership. Gold prices surged amid heightened uncertainty following Trump's first wave of executive orders, particularly his announcement of tariffs, as traders assessed their inflationary impact and potential effects on global monetary policy. According to analysts at GSC Commodity Intelligence Canada, one of the top 4 global gold producers, relies heavily on the U.S., its largest importer of gold. Macleod concluded that Trump's policies, particularly regarding energy, could shift political mindsets globally and provide a much-needed course correction for economies burdened by misguided climate and socialist agendas. While inflationary policies come with their own set of challenges, the rejection of economically harmful restrictions on energy could bring long-term benefits. Join us as we dive into the video for a deeper look. Don't forget to subscribe and click the bell icon to stay informed about our latest updates.
It's interesting because the day after his inauguration, gold is actually taking a jump up. I mean, it's up, 1.25% today. Not huge in the scheme of things, but I think where it's going, it's certainly pointing in the right direction as far as the bulls of gold are concerned. I mean, all the executive orders and everything else, that sort of is just so much noise, that it's rather hard to lose, if you like, the main point. And the main point is that Donald Trump is an inflationist. Of that, there is absolutely no doubt. And that is, I think, the vote that foreigners have taken, which is why gold has gone better today. And also, presumably, to an extent, vote that the futures markets, like COMEX in particular, the participants there have taken. So I think we should be guided by that, if you like, in terms of, really what he means. Now, having said that, I would say that as an inflationist, that is obviously very, very bad. I mean, it's common with all politicians. All politicians think that, interest rates should be far lower. And, Fed, why aren't you doing your job lowering interest rates? Is a sort of question, if you like, that gets thrown by every president, let's face it, every prime minister, right, it's a common sort of political get out. I think there are very positive things, though. One is that he's climbing down from this climate change thing, which I think is desperately important, because this idea of doing away with fossil fuels is economically destructive. I don't mean just for the profits of oil companies, gas producers, whatever. I mean from the point of view of the broader economy. If the broader economy hasn't got energy, nothing works. So I would take that as an enormous positive. I'm not going to get drawn into the climate change thing, other than just make observations. It has wrong-footed very much, if you like, a lot of the rest of the world, who are both, sort of all for doing away with fossil fuels, all woke, and all the rest of it. And this is going to be a major, major influence, I think, in global politics, particularly when it comes to Europe, who have just lost their way completely. Britain has lost its way completely. We've got a far left socialist government with a sort of schoolroom socialism of the 1930s in mind. That's all they seem to know. So they're being doubly destructive on the UK economy. But I think this sort of drill baby drill thing that Trump is insisting on, I think that is going to turn political mind quite a bit. And hopefully a lot of these deadlines that we've got, like by 2030, no more this, no more that. On that basis, I think these deadlines, probably what the politicians will do is they will just sort of push the deadlines out a little bit, rather than climb down completely, because they're socialists, which Trump is not. Inflationist, but not a socialist. So I think there are good points here.
A key factor driving record gold prices has been central banks' efforts to diversify their foreign reserves away from the US dollar, particularly in major emerging markets like China, Russia, and Turkey. According to the World Gold Council, central banks will continue to play a crucial role in gold demand this year. The council notes that sustained central bank purchases will remain a significant driver, providing ongoing support for gold prices. According to Alasdair Macleod, this trend highlights the diminishing appeal of fiat currencies. He explains that central banks are not merely buying gold, but are deliberately divesting US dollars, signaling a profound shift in monetary priorities. Macleod emphasizes that central banks fully understand the vulnerabilities of fiat currencies, especially those exposed to geopolitical uncertainties and inflationary pressures. This strategic move, he suggests, reflects their awareness of the need to mitigate risks associated with currencies carrying counterparty risks. Now, let's redirect our attention to a video.
Yeah, it is a common statement that the Central Bank of China, the People's Bank of China, has been buying gold. That's not the way to look at it. Actually, what they've been doing is dumping dollars. Now, if you understand the difference between the two, it tells you something extremely important. And this is in common with all the other central banks. And remember, they've been told by Vladimir Putin, who's had his reserves stolen by us, don't trust the West, don't trust their currencies. Buy gold. He's pretty much said that. And so you sort of think, these guys, I tell you, the central bankers I've met are actually pretty cute. Most of them do understand, sort of, if you like, the outcome for the purchasing power of foreign currencies, etc., etc. It's just they're not in a position really to do anything about it themselves. But, the fact that central banks continue to buy gold, in fact, they're pretty much cleaning out all the mine supply, tells you quite simply that these guys really are in the know. They're ahead of the speculators. The speculators can see it, so they go and buy. The poor old swaps and bullion banks, find that they're getting squeezed. I feel so sorry for them. I'm going to cry bitter, bitter tears. But I don't think we need to dwell on that too long. But no, I think it is a very, very important point that what the central banks are doing is they're not buying gold, they're selling fiat currencies because they understand the difference between money without any counterparty risk and currency with counterparty risk. So what they're telling us is, hold on, this whole system is looking a bit dangerous. Let's put it that way. Put yourself in the shoes of a foreign central banker. I mean, he'll be looking at the effect of the tariffs on the consumer price index. He'll be looking at the effect of the tariffs on the consumer price index, and he'll be looking at the budget deficits and how that's, inflating the whole thing, deflating the purchasing power of the currency by inflating its quantity. So he will do that thing which I was talking about earlier on. He will look at, what am I getting actually paid, let us say, by holding US treasuries? And, what's going to happen to the purchasing power of the currencies over the period which I hold them? And if it doesn't stack up, he's going to continue to sell dollars. Now, does he go and buy another currency? The answer is no. Because, as I keep on quoting Steve Hanke, because I think he's got such a good turn of phrase on this. He says that the dollar is the least dirty shirt in the laundry. Mm-hmm. And he's right, because the other currencies, if the dollar goes down, the other currencies go down even quicker, as we're seeing at the moment. The dollar is going down against gold. And if you look at the other currencies, they're going down even faster against gold, which means that they're also going down against the dollar, which is why the dollar's trade weighted is suddenly in a fantastic bull market. And it's got a lot further to go on technical considerations alone.
After President Trump resumed office this January, uncertainty remains over whether the Federal Reserve will continue cutting interest rates. However, if inflation stays near the Fed's 2% target without significant increases, further rate cuts may be on the table in 2025. Research from Goldman Sachs indicates that gold prices could surpass $3,000 per troy ounce by the end of 2025, signaling continued momentum for the precious metal. Is gold's rise primarily driven by inflation fears or broader geopolitical and economic uncertainties? Join the conversation. Share your thoughts in the comments, give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.